Okay.
Hello, everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is July 29th, 2022. And yes, the cryptocurrency market is still rallying. Yes, we're still in an uptrend, and the uptrend is not yet broken. So be very, very careful going short, or be very careful trying to fade this rally. Okay, I'm going to tell you why I believe the rally's not yet finished and what my targets to the upside are. Okay, if that interests you, then watch until the very end. I'm on the hourly chart for Bitcoin just because I want to see detail. All right. And guys, remember that any uptrend, okay, is going to have a series of pullbacks, all right, of retracements. That's normal. Okay. A retracement does not an uptrend break. Okay. And you can say the same thing for a downtrend. What you're looking for is a break of the trend, a legitimate, a sort of bona fide break of the trend. Okay, and so if you draw a trend line, I mean, there's a lot of ways you can do this. This is one of the less scientific ways, or less sort of precise ways, but it's a way, right? You draw a trend line and you see, okay, you've been bouncing off of the trend line, then it's likely that the trend isn't broken. But I understand it's tricky. Okay, it's tricky because like when you don't want to get caught in the downtrend, but this is why you don't want to trade just the smallest moves and you want to zoom out. Okay, I'm on the hourly time frame because I want to look and see detail. However, I'm entering trades on the 4 hourly, the daily, and the weekly, okay? For that reason, because the risk is minimized. It's just a high level of risk if you tell yourself that I'm going to go on a small time frame and go long or go short, and if the price goes against me, then manage to trade thusly. It's possible, but it's just you're increasing your risk and making it much harder for you to succeed in the long run, okay? And especially if, so it makes even less sense in our current situation where if you zoom out, let's zoom out on the daily really quickly. If you zoom out, you're in a clear reversal consolidation, or at least what's potentially a reversal consolidation move, where you're reversing. Let me go on log for this to make sense, okay? You're reversing uh all these days from this point, April 15th, 2021. You're reversing approximately, oh my god, they updated this tool not no longer to show the date, and it drives me crazy. You're reversing 430 days of corrective price action, okay? And then specifically, if you look just at the downtrend, you're reversing 221 days of downtrend. So it's just, it's not the wisest thing to do. To, all right, let me go on the small time frames and start trading in and out. Like, just try and, if you are correct that this is a high time frame reversal, just get in somewhere and ride it instead of concerning yourself with little moves here and little moves there. My friends, I'm speaking from experience. You don't make money by trading a lot of little trades here and there. You can do that, but it's less likely that you're making money that way. People have made money that way. People do make money that way, but they're few and far between. Most people make money by making larger trades with larger time horizons. And a lot of times people don't want to trade the larger time horizons because they're impatient. But actually, when you learn to make time your friend, to use time as an asset, to make it part of your edge, that's when you win. If you combine your analytical skills and your understanding of the market with your patience in letting moves play out. It doesn't necessarily mean you're always going to be right. Sometimes you got to play defense. Sometimes you got to cushion a margin, so on and so forth. But when you do get it right, trust me, you just let those trades ride. That's where the money's made. Trust me, I've done this. I've done the other side. I've tried to be smarter than the average bear and trade every little move because I was overconfident in my skills. And it's not a bad thing because I learned so much about precision. I learned so much about actually looking on the smaller time frames and looking trying to make reads, right? But at the end of the day, there's just so many combinations and permutations that price can make. It's a low probability affair. Okay, now enough of trading wisdoms and all that stuff. Let's get into what's going on. Okay, and this is what kind of this is what I'm trying to say here. Price went up to 24.2. Okay, we know that the region between 23K and 24K was staunch resistance because we're below it. It would be support if we were above it. So we know it's staunch resistance, and we've been saying on the channel that once we break this region, we can expect fireworks. Okay, this region specifically. I'm gonna let me be consistent and take the the rectangle tool. Here we go. So once we break this region, we've been saying that this is when we can really expect the fireworks. Okay, we wicked above it and then we got rejected. Now, what do we look for a proper rejection? We want to use math. We want to use the phi ratio, the 0.618. Okay, so if a trend, so you can use your trend lines as we did, but a more precise way to look at whether a trend is broken or not is just by using math. If you've been going up for some time and you retrace beyond the 0.618, the phi ratio, the golden mean, then it's likely you're in correction or you're initiating a correction. Okay? If you hold the 0.618, the golden mean, then that trend is likely to continue. It's that simple. It's never 100%. There are certain cases in leading diagonals where the 0.618 is wicked beyond or even broken, perhaps, but it's exceedingly rare. Okay, that is my way to go about this, reading these markets where I'm not exactly sure. Wait, is this the break of trend? Are we going to continue the trend, or is the trend turning? Right? Remember, these trend changes, even on the large time frame, especially on the small time frame, they're hard to catch. It's hard to catch exactly when a trend changes. And typically, when you do that, you tend to be wrong more than you're right. Doesn't mean you're not going to be close, but if you're looking to trade the exact turn of the market, it's a very low probability affair. Okay, that's just a fact. Okay, because it's tough. Okay, so what you can do is you can grab your Fibonacci retracement tool from the bottom and to the top of this entire move from 20,000 all the way to 24.4. Okay, and actually what you can do is say, hey, look, I'm going to be okay with price playing anywhere above here. Okay, and then you don't even have to concern yourself with the small time frame reads as to what this is, like how to read this. Is it an extended wave 5, initiating, or what? And we'll get into that in just a second. But that's just a nice way, a simple way, high probability way. It's all about probabilities here, to stay in a trend and not get shaken out, right? So in order for 0.618 to make sense for you, you will have had to see this move around here. But if you've been FOMOing in, even then, if you have some margin, right, you always want to look at your 0.618, your phi ratio. Is the phi ratio held? Okay. So this phi ratio was held on this larger move, and even on the smaller move. So we could say another uptrend here. This 618 was held. Okay. Whoops. Okay, sorry about that. My mouse. But you guys see what I'm talking about? Like, you just want to look at the phi ratio. It's so important. That's why they call it the golden mean. It's amazing. It really works. It really works. So you see that both phi ratios 0.618 of both uptrends and the uptrend in aggregate have been held. So it's likely, highly likely, probabilistically, that this trend will continue. Another reason, if you want to get more into the detail, is that let's say you thought, okay, this is 5 waves up, we want 3 waves down. Remember what that means. Typically, if you get a retracement, it's going to take approximately the amount of time that it took you to go up. Okay, so if we went up for 2 days and 16 hours, right, expect us to go down for 2 days and 16 hours. But that doesn't make sense, right? Because think about it. It's the 29th, one day after the new moon. The new moon was yesterday, right? If we were to retrace for 2 days and 16 hours, why would we turn and start pumping on the 31st, which is not anywhere close to a full moon? The next full moon isn't until maybe the 11th of August. You see what I mean? So you always want to just kind of think it out. Like, it doesn't make sense that price would retrace all the way here for a few reasons. Okay, so those are the reasons I thought of when looking at price action retracing. And it also makes sense that we do kind of revisit this just structurally. So now let's zoom out to the 4 hourly time frame. And guys, if you're getting value, please like, share, and subscribe. Remember, it was an important thing to break 23. Remember, because our resistance here wasn't just the 24K, it was between 23 and 24K. So what we did essentially here, let's see. Our resistance was like here-ish, right? What we did was break and retest, which you can expect us to do anytime you face staunch resistance. You got to break it and retest it. It's called an RS flip. And that's exactly what we did. Okay, so this is what I'm seeing in Bitcoin. And my targets, as usual, are up over the 30K region. Why? I'm going to reiterate this. In an uptrend, you want to make a higher high. In a downtrend, you want to make a lower low. If you take a Fibonacci extension tool from this purported wave 1, retracement of wave 2, you can see that the 1618 and the 2, where your wave 3 tends to fall, is between 31,000 and 34,000. Expect Bitcoin to come above 31K, above this zone of resistance. It's resistance now because we're below it, right? Expect it to come above this zone of resistance if we are indeed in an uptrend, so that we may do something like this. Boom, boom. Okay. And as for time frames, remember, studies show that 0 to 3 days after a new moon, you get local market peaks. Okay. The new moon was on the 28th, right? 0 to 3 days after, the maximum is the 31st of July. Okay, so we can still expect price to move for a maximum of 2 to 3 more days. Okay, so this uptrend is likely for a number of reasons. And that's pretty much it for Bitcoin. Okay, so I'm expecting a big move, because you're finally breaking this resistance right here. Yeah, a big move to this region, into this zone between 1618 and the 2. And, don't be surprised if we even extend this wave 3 to go above it. But at the end of the day, it is highly likely, right? Always probabilities, highly likely that we not only break this, but retest it, okay, in a wave 4. And that wave 4 is what makes sense to take our 2 weeks, where we consolidate up until the next full moon around August 11th. Okay, so that's what I'm seeing on the charts. And this is what you can see pretty much across the board, right? You look at Dodo, you see the same thing. You're in, you just started your wave 3, right? You hit your wave 2, you just started your wave 3. You're breaking important resistance right here. So, you're almost at the 31st, right? It's going to be sort of a new moon top for everything in the market. So expect 2 to 3 more days of positive price action, and for us to hit those levels, those levels up here, around representing the 1618 to the 2 minimum, right? Which usually shows the wave 3 extension, okay, and that would be in Dodo uh, above 26 cents, from 26 to 30 cents, something like that, okay? Litecoin, same thing. You're in your wave 3, you're breaking important resistance. You basically did an RS flip here. You broke important resistance, turned it in support. Expect a big run in your wave 3, targeting 1618 to the 2 Fibonacci extension of this wave 1. Okay, Cardano, same thing. It's the same thing across the board, okay? The only deviations here are in those assets that have yet to print a wave 1, like reserve rights. I expect reserve rights to come all the way up to about 2.2 cents and break this high, right? Because we're in an uptrend. You want to make a higher high, then retrace for its wave 2, strong retracements. I expect reserve rights to go up quite a bit. All right. And Kadena is also not in a wave 3. It just is starting its wave 1. Okay, but that's pretty much it for me. I guess I think you guys get the point. The uptrend seems to be continuing, and I don't expect it to stop until the 30th or the 31st, and until we break the 30K region. Okay, so hope this was helpful. Hope this was useful. If you got value, please like, share, and subscribe. Guys, be well, trade safe, zoom out. Don't try to go on smaller time frames and just be too risky. Like, increase your probability of winning this trade, and you will win the trade. Okay, and yeah, that's it for me. Have a great Friday, and I'll see you guys.